Hi, everyone. This is James. I am a startup entrepreneur from the Q Engineering acquisition, also a minerals investor, and a full-time beard advocate. I know what you're thinking. It is a thing. Today, I'm going to be speaking about two out of those three items I just mentioned. And I'm going to deliver some exciting news. We have directly connected the Q Engineering platform directly to your core membership. So some of you using Prism may ask, well, what does this mean to me? To which I reply, well, if you've ever wanted to adjust a forecast just a little bit within Prism, now you can. So by combining Q with Core, you could directly connect to all the wells that you have in Prism, pull in all of that data, forecast any one of those wells manually, automatically, whatever your heart desires, create type curves, and really orient that type of engineering analysis towards M&A workflows, asset development workflows. So if you wanted to work to value an acquisition, or if you wanted to figure out if you wanted to drill that next well, now you can. On top of that, we also offer another set of analytics on top of the deep bench of analytics you already get within Prism. And you also get our curated Spotfire workbooks that import all the data that you have in Prism directly, and also has several of our workflows built into those. Today, instead of walking through a normal product demo, instead of just showing you like where all the features and buttons are, I'm actually going to orient this towards a project that's pretty important to me. It's actually a minerals analysis. We're going to cover a public minerals company out there, Viper Energy Partners. They recently had a earnings release not too long ago. And full disclosure, I am a shareholder of Viper, and I'm approaching this project as with an investor's mindset. Same mindset that all of you have when you're evaluating projects for your company. I'm really going to target this analysis on trying to really assess whether or not parts of their acreage are still in the money in today's market conditions. I really want to understand the viability of future drilling projects. I'd like to validate economics of potential new drills that you could develop on their acreage or around their acreage. And I'm going to do this by employing a combination of forecasts, mapping, various analytics, type curves, and ultimately economics, because that's what matters at the end of the day. And I'm going to use three tools to do this. I'm going to use Prism. I'm going to use Q's Basin Studio and Q Engineering's Typecurve Studio to get the job done. And as you watch this demonstration, and you're a serious investor that's interested in the latest tools that you're going to see today, give us a call. Love to drop in and see how I could help. So without further ado, let's go ahead and get started. We're going to start this analysis off in Prism. The reason why I'm going to start it in Prism is I really want to ensure that this acreage space that I'm looking at passes my first screen. And there's two things that I'm looking for in my screen. One, is this area active, or is it actively being drilled? And two, are those wells that are being drilled, are they economic? If those two things pass, then I'm going to take this into the next stage of the engineering workflow and try to understand the PDP and the undeveloped opportunities. So let's first begin with, well, where are we going to look? So for that, I'm going to turn to Viper's latest investor presentation. These investor presentations are great to dig through. It provides excellent highlights, operational highlights from the last quarter, provides guidance of what they're planning to accomplish in the next few quarters, provides additional items. Every one of them varies, but this one provides guidance on cash flow sensitivities, distributions of their inventory, so we can get a great understanding of that. And we can see that Diamondback really accounts for about 50% of its line of sight inventory and near-term inventory. And really what I want to focus on today is They're AOIs. They've indicated 7 AOIs that we could look at for our assessment. We won't have time to go through all of them, so we're actually going to start with this Howard AOI right over here in the northeast in the Midland Basin. So we're going to dive into Prism and try to get an understanding of what does this area look like? Does it pass our initial screen? And for that, we'll jump into Prism. I've already drilled down to horizontal wells within the Delaware and Midland Basin. So now I'm going to focus on the Midland Basin specifically, and I'm going to zoom into that area of interest. And I've overlaid the acreage with active drilling rigs so we could get an idea of where they're being drilled. And we see that this AOI is right here on the northwest corner of Howard. It's kind of hard to judge or gauge where it is there, but one thing that the investor presentations have highlighted is that Diamondback is the primary operator, or they operate close to 50% of the wells, or they own 50% of the inventory. So because of that, I'm going to focus in on Diamondback's results. And so by filtering down to Diamondback, that area in Howard County really begins to materialize. It's a little easier to focus in on that. And so when analyzing this area, I've come to realize that the Wolfcamp A is pretty active out here. We can see that, well, let's not zoom in there. We can see in the map that within this AOI, we also have Sprayberry, Wolfcamp B uppers, and a few other intervals to focus on. But for this, I'm going to click on the Wolfcamp A and really dial in my analysis on that area. And I've pulled up a widget here that allows me to assess the rate of return at $50 per barrel and $2 per M on gas. And I can see that I've zoomed in to the Wolfcamp A, and I can see in this area that the rate of returns at this price range are north of 50%. So it's looking to be a pretty viable area to develop. So these AOIs are starting to pass my initial screen. What I could do as well is draw a polygon around that area of interest and get a more detailed understanding that, yeah, this is really starting to look like more of the higher tier developments. Now we're looking at much higher rate of returns in this specific area in the portfolio. So I'm starting to have a little more confidence, or a lot more confidence, in moving this into the second stage of the analysis. And in that second stage of the analysis, I'm going to jump from the Prism platform into the Q platform and start to evaluate the finer details of the engineering workflow. Now I'm introducing Basin Studio. And when I reflect on Basin Studio, it really reminds me of the early days at Q, the hard days. and I reflect back on conversations that we had with customers when we're thinking about developing this product. And there's really one question that was burning in all of our minds, and it was, yeah, well, what if you could manage reserves on a basin scale, 20, 30,000 wells? What if you could manage that number of wells? What could you do with that information if it was married to your public data subscription? And where our minds went was, yeah, we believe that we could zoom into any piece of acreage and highlight a large group of wells and see a probability distribution for P90, P10, P50 EURs. We imagine that we can build heat maps and marry it with geology data or geologic data to create sweet spot analysis. We imagine combining spacing and performance data to really start to quantify performance degradation from parent-child relationships. And at the end of all this, exporting it all to Aries and PHDWin to jumpstart a reserves process. And what we ended up creating really was a value proposition that was only limited by a user's creativity. So one of the first things that I'm going to point out here is that all the wells that you see here are the same wells you see in Prism. And now you're directly connected to that live data source. So you could pull it here in the Q platform. You could add your own pages, add your own visualizations, and really make this analysis your own. And next up, we're going to actually start filtering the data. So I'm going to jump in. I'm going to forecast only, I'm going to focus my project only on the horizontal wells, only Wolfcamp A. And after first producing after my specified date. And now I'll have a group of wells that I can analyze. So you'll also notice that I've already uploaded my Viper acreage file. So it's great that you could upload these acreage files. This is going to make it much, much easier for me to go through and run my evaluation exercise. So instead of just highlighting or zooming in and highlighting the specific group of wells that we saw in the investor presentation, I'm actually going to zoom out. And select all the wells in that basin. So these are all the Wolfcamp A wells, and I'm actually going to focus on forecasting all of those. So I've already set up this project. What's great about this part of the workflow is, hey, it allows me to organize all of my projects into multiple ones. Like if I wanted Wolfcamp A, B, C, all the letters of the alphabet. Allows you to do that. I can collaborate with other people on my team. So I can share a project with my teammate if they wanted to use it, if they wanted to clone it and change it, they could do so. But more importantly, it allows me to divide and conquer. So I could jump in and I could subset this into multiple groups. So if I had a team of 5 engineers that I was working with, we could split this up into more manageable projects. That way each one of us can work on our own forecasts at our own leisure, and we could roll up all the results together into one project. So super cool that we're able to do that. But once we get to the fun stuff and we actually start forecasting, this is where we end up. So from here, we could actually start with one of the phases. So I'm starting with oil. And we first start a workflow by pre-processing the data. So we filter it, we create segmentations, then we create automated forecasts. We can manually override any one of those, and we can save our work to the cloud so we can share it across our team as different qualifiers, much like you would use in your reserve software. And we could even export it to your reserve software. So if you're using Aries, PHDWin, Excel, we could export it to any of those apps so you can quickly plug it into your operation. So when we start with filtering, you can configure this any way you want. You can filter out any of the points now that you see in red. So I've already run this little one. Segmentation. So we don't want to forecast the entire stream. In this situation, I programmed it in to actually create segments for different flow regimes that it tried to detect. So any frac hits, it's going to try to detect those. Any big changes in slope, it'll try to detect those. That way you can start forecasting from the most relevant trend or the most recent relevant trend. And what is a relevant trend? Well, hey, you get to determine that. So I basically didn't want to forecast anything that had a trend of less than 15 months for my analysis. So I programmed my algorithm to run that way. So here's a big group of Viper and other operator wells. Just kidding, Viper's not an operator, but Diamondback and other operators. So I have the whole portfolio of Wolfcamp wells in the Midland Basin here. When I ran the forecasting algorithm, I configured it a certain way. I really like this algorithm because it actually uses machine learning to learn from all the wells around it. I can control how it learns by setting the boundaries. So I can tell it to run B factors between a specific range, same with declines. I programmed my analysis to let all the variables float and just basically allowed it to figure out what it thinks the B factor should be. I've also programmed in the machine learning module to learn from wells that are greater than 15 months old. I expect wells that are older than that to start to get out of linear flow and to start entering a more stable flow regime. For wells that are younger than that, I've asked the simulation engine to learn from all the wells around it so it can give me some higher quality fits. And I requested that it's going to give me somewhere near the 50th percentile. So when I run it, I get what I expect to be 50th percentile wells. My B factors are right around 1, but some of them go up to 1.4, 1.5. And if I wanted to skew this a little bit, I can just change the way my simulation engine runs. See, my decline is a little more log normal for my decline parameter. I feel pretty confident about the initial set of forecasts that I have. If I wanted to manually override it, hey, I'm going to want to. The forecaster will get most of them. It's not going to get them all. You normally expect it to get around 85% of the forecast. I can just go into this QC page. The program will tell me, hey, here are all the wells that it thinks it did a pretty good job at forecasting. I can see my roll-up plot. It actually looks pretty good. I can see wells that it thinks that were over-predicted, and I can see wells that it thinks that were under-predicted. But if I wanted to revisit any of these wells, I can just say, hey, I want to QC all of these wells here. Maybe I want to run the simulator a little differently on this subset, or maybe I just wanted to go through and actually manually override some of these. Complete flexibility to do that. So what this really allows me to do now, after forecasting all the Wolfcamp A wells for this evaluation, is I can actually manage those forecasts by exception. So instead of manually going one by one through thousands of wells, I can actually look up, hey, which forecasts have actually decohered from production and focus on those. But now I have a great starting point. I'm not going to touch up all the wells perfectly, but right now I'm going to I can save my work, already saved it, but you can basically create a forecast set and share that qualifier with your team. And I'm going to export this to Aries, so I have it ready to go, my Aries project. This is going to take all the phases that I've run and create a very convenient Aries or PHDWin file, whichever app you use. You can save it, and at that point, you could open it and basically upload that straight to Aries, and you're good to go. So after seeing this part of the workflow, this is really the starting point. So now I can actually dig into all the analytics that this workflow powers. So I have the EURs, now I can go into the analytics. First thing you may notice is that it feels like a very familiar workflow. And that's because that we basically made it to speed up the industry's current forecasting process. So it's going to be a lot faster to QC, a lot faster to run thousands of wells. What I love about it is for this Viper evaluation, I could train the model to run whichever way I want it to run. If I wanted it to give me a more optimistic scenario, I can do that. If I wanted to be more conservative, I can train it to run more conservative. And at the end, just override any of the results that I get back. So I'm always in complete control. And then I could export it to any economic or reserve software and run some more detailed cash flow analysis if I wanted. But my next step in this exercise is to actually jump into some of the analytics and go from there. Now we're looking at the EUR map. Okay, so when I'm looking at this acreage base, I can remember that we have several AOIs right around here. My initial focus was going to be on this Howard AOI, but there's several other AOIs out here. So when I jump over here, I'm going to highlight that Howard area first and see what kind of story it's telling me. I have everything colored by percentile. So in red and orange and yellow, I'm going to see the highest EUR responses. And the bluish colors, blue and green, I'm going to see the lower EUR responses. So what's interesting is when I select this Howard area, I see pretty good convergence across my P50 EURs, oil EURs, across every single year. I'm only looking from 2015 through 2019 on this plot. Everything rolled up together, my P50 is right around that 500,000 barrels. That's looking pretty good. When I select this center acreage right in here, I can see the story is a little different. It looks like the results are getting better year over year. So that's something that I should definitely take into account in my type curve valuation. So it's going to be very important to understand what's driving that, if it's proppant, if it's spacing. So like when I'm actually creating my go forward view, I'm using the most relevant wells available. I can see out here in this area, I believe they called it the Glasscock area. That makes sense. I'm getting, for Wolfcamp A, I'm getting lower EUR responses, but there's a lot of other benches that we can look at here. Also seeing a story developing with vintage. So more than likely there's new technology that's getting tested out. Perhaps we're landing in the zone a little differently, but we'll have to definitely look to see what role proppant and spacing and lateral lengths are playing in this vintage story right here. But yeah, so it's allowing me to at least understand in my first area what my expectations should be. I can understand my P50. I could easily dive in here, go in the properties, and add in add in curves for my P90 and my P10. But this is giving me a very good, at least grounded me in my expectations here. Beyond the EUR map, there's some other developments that we've been making. One of the ones I'll focus in on this exercise is heat mapping. So one thing that's pretty cool about the Prism subscription, I downloaded all the break-even prices on their 15-to-1 study, and I gridded it up within Basin Studio. I gridded it to actually show me like where the acreage base is, and to show me what the underlying break-even prices look like around those acreage bases. So as an investor, shareholder, one thing that gives me confidence is this acreage in Howard AOI, that's firmly within the $30, mid-30s break-even pricing. So I'm starting to feel a lot more confident about future development in that area. I can see a fairway right in here in the two AOYs. Going to the Glasscock AOI, I'm seeing some agreement with the lower EUR responses. Break-evens are a little higher. This is getting into the 40s for that contour band right here. So what's pretty cool about this, if you had geologic attributes, like if you wanted a grid pH, you can understand what the correlation is with rock quality. If you wanted to incorporate rock pores and fluids, you can look at the hydrocarbon pore volume. You can grid that up and really just start working your way towards understanding or uncovering sweet spots. But right now the story's coming together. It looks like there's an incentive or economic incentive to drill in this acreage base. You could also download the actual IRRs and grid those IRRs and work it that way. But yeah, so far so good. Next up, EUR maps making sense. I see a story coming together. Outside of the EUR map, break-even prices. This is looking like this project is looking like it's in the 30s for break-even pricing. Some parts of the acreage base are in the 40s, so I definitely have to consider that in my investment thesis. When I jump in to the next part that interests me is when I start thinking of future development. Spacing is going to be a big part of that. So next up in my assessment, I'm going to look at spacing. I'm going to highlight that Howard AOI that I saw up here, and I'm going to focus my attention on the child and parent wells, and I can see a noticeable degradation in performance between both the parent-child populations on an EUR per foot basis. I can actually see that at 6 and 8 wells per section, I'm seeing an additional erosion of performance once I tighten up spacing in the Wolfcamp A. And I can see the Typecurve and Cume plots here and assess at what point in time that degradation occurs. So it looks like it's after year 2 when I start noticing that performance degradation. I can quickly look at other parts of the acreage, see if those observations persist. In the central area, I can see that standalone wells are outperforming all other types. I still see a degradation in performance, something I can quantify, at least, between parent and child wells. Again, 6, 8 wells per section, I'm starting to see productivity fall off. And this is also confirmed on the Typecurve plots. Unbounded wells, no surprise, are outperforming fully bounded and half-bounded neighbors. So yeah, I'm really starting to see everything come together here. What this is doing is building my story for my investment case. And the next part of the journey is really understanding, hey, if I was to drill a new well, if I wanted to think about proved undeveloped opportunities, are they economic? Are they not? So for that, we're going to jump into Typecurve Studio. And within Typecurve Studio, we're going to actually go through and answer that question. So now for our last act, we're going to jump into Typecurve Studio. And at this point in the process, let's review what we've covered already. So we started out in Prism. We screened an asset. Things were looking pretty good on the first screen. It appeared to us as if the area was active. The economics past the first screen to look like operators had an incentive to drill. We went through and forecasted all the wells in the basin. Ran through some of the analytics that we had available. We got an idea of what ranges of EUR we should expect in Howard and a few other areas. We're able to create some heat maps to understand what we expect the break-even prices to look like. Now we want to confirm and see what our go-forward scenarios look like. We went through and understood the relationship that well spacing has on performance. So we're getting an idea of what the story looks like there. The last act that we have is to try to generate a type curve for our drilling scenario, get an idea if the type curve is economic, and figure out where to go from there. So let's go ahead and hop in. With Typecurve Studio, I've already filtered down to all the wells within the Wolfcamp A from the Prism subscription. So you can see all the wells that we have available here. I have Viper's acreage base set as the background, so we're able to understand or orient ourselves with AOIs. All is well there. One thing that I haven't spoken about, but is present, I've also uploaded private data. So I have data from a VDR. I've uploaded that information, and I blended that information with the Prism data. So one thing that's pretty cool about the application is you can upload proprietary data directly to Typecurve Studio. You could overwrite any number of attributes. You could override the reservoir, override operator. You could even add your own columns if you wanted. And you could even override production data. So if you have an Aries database or a PHDWin database, if you pulled the production data out, you could upload it. And from there, you could actually override anything that is in Prism with the ground truth, if you will. So you're forecasting actual data instead of actually forecasting public data. So pretty cool. Have that put into place. So next up, it's going to validate that. We have cool animations. There we go. All right, so now we're going to jump into well selection. We've already talked about the story that was coming together. You have some additional items that you can review here. Like if you wanted to look how proppant loading was changing in this area over time, we can zoom in to filter out any bad data out there. So that's what the proppant loading story looks like over time. From here, we have a technology plot. So if you wanted to hone in on Gen 4 wells, you can do that. These are wells that are going to have the highest proppant loading and wells with the longest lateral length. For this investment case, I'm actually going to focus on all of these wells. So it gives us a little more flexibility on what kind of type curves we wanted to generate. If we wanted to generate Gen 4, Gen 3, we could always decide on that later. What I am going to focus on, instead of the whole basin, I'm only going to focus on the north half of the basin here. So I'm going to focus on those wells right there. In Typecurve Studio, you create a well collection. This is the Wolfcamp A northern half right here. So you can see that the Howard County, Howard acreage is right here. At this point in the process, I'm going to jump into the decline page. We've already walked through the decline workflow within Basin Studio. Instead of walking through it all over again, I've already generated some forecast here. I've already gone through the manual override. Exports, very familiar here. You have PHDWin, Aries. We can create monthly one-line tables. But I've already gone through, forecasted the data, QC'd a couple wells, and really the next part of the analysis is trying to get together a type curve and understand whether or not that type curve is economic. Okay. All right. So now we are on the type curve part of the workflow. So what do we have? In this dashboard, we have a normalization chart showing your lateral length versus the EUR. Right now, I have it broken down by well class, parent-child, standalone. And on the map, I have Viper's acreage in the background and all of the wells that I forecasted. I have everything split into different generations. The most modern generation is over here in the top right quadrant with the highest proppant loading and the longest drill lengths. So these are all relatively long wells right in this part of the acreage. And then we have the production plot of all the wells put together. So right now, I really want to focus on what is my investment thesis? I really want to think this through of, if I was to drill a well, or if an operator was to come out here and drill a well, what kind of well would they drill? Would they drill like a Gen 4 well with 3,000 pounds, or would they drill on a 2,500 pounds? Would they drill on 8,000 feet, 10,000 feet? These are the scenarios that we want to think through and model in this part of the software. The scenario I'm going to run for my initial investment case is to highlight this area right over here in Howard. After highlighting that, I'm going to focus on parent wells in this part of the workflow. I'm going to remove this outlier right here. And I'm going to normalize everything to this center part of this cluster, 9,700 feet. I'm going to use traditional normalization, which is industry standard of EUR per foot, or production per foot. So this is going to project everything onto this lateral length plane that you see right here. And now that I have my hypothesis ready for evaluation, I'm going to go in to this Create Type Curve page. And on the Create Type Curve page, there we go. We have well producing already. On this Create Type Curve page, what it's going to do is model a proposal. This is just a starting point. It puts together all of the underlying public production data. It merges that with all the proprietary production data and attaches all of the forecasts that we just created. And by doing that, we're able to create a average of the actual data an average of the forecast, and make sure that our type curve is consistent across the entire life of this type curve analysis life cycle. So what I'm going to do is I'm going to reduce the IP on this one. Reduce the IP, adjust the decline. And as I'm adjusting this type curve, you'll see on the probit plot that I'm getting closer to this SPEE recommended territory in between the mean and the P50. Looks like qualitatively my type curve is making a lot of sense. And as one final check, I'm going to run a drilling simulation. And what this drilling simulation is actually going to do is take all the wells that are in my type curve, all the wells that you see right here selected, and it's going to roll up all of the actual production here in green, and then run a what if drilling scenario of every time one of these, what if every time one of these wells came online, instead of performing as they actually did, you actually drill a type curve over and over and over again. And this allows me to see how well my type curve actually models all of the good wells, all of the bad wells, and everything in between. So right now I'm underperforming a tad. So I'm going to adjust my type curve. Now I'm hitting it a little, I'm hitting it right on the spot. I'm a little outside of that recommended range by the SPEE. So I'm going to adjust my B factor, which affects more of the late life reserves. Now I'm on the mean, rerun my scenario. I'm looking very good. So I'm history matching my type curve against all the production that has actually occurred. Qualitatively, it looks like my type curve is performing very, very well. It looks like I'm right within the SPEE recommended territory, in between the mean, in this case, right on the mean, and the P50. So I may want to drop that down just a tad, just to get my reserves in line. Right around that 600,000, 650,000 barrel range. I now have my type curve for my parent set. I also created one for a child well at this same footage. So if I wanted to go through and walk through those assumptions, hey, a child well is easily created, set that hypothesis up, turn off all the parents, turn off all the standalones, and then I could rerun that child development scenario. If I wanted to look at a different part of the acreage base, if I wanted to evaluate upside for that acreage, just as easy to highlight that. If I wanted to evaluate this piece of acreage, I could form that hypothesis as well. If I wanted to evaluate this one, it's really that simple. If I wanted to look at all the highest proppant loading wells, I could focus my attention on the most modern technology that's being deployed and create type curve assumptions around that. All those models or all those scenarios were meant to get plugged right into this interface where you bring all your data in, whether it's from a VDR or your subscription. And yeah, you could just test all the different development scenarios you would like. And at the end of that, you can plug that into Aries or PHDWin with some tools that we have built into that type curve page. I can evaluate this parent type curve, look at the economics, plug in different oil prices, different expenses, different capital assumptions, different shrinks, BTUs, NGL assumptions. And after tuning this model a bit, I still have a little more tuning to go. At $40 per barrel, yeah, this parent well is still looking economic. If I wanted to compare it to the assumptions that we were looking at $50 a barrel, 25% diffs on the NGLs, 95% on the oil. Took some of these parameters directly from the Viper investment presentation. I can see that I'm getting close to that 100% rate of return. When we're screening these assets within the Prism app, the rate of returns were closer to 90, 95%. So I'm seeing some agreement there tightening up my assumptions. If I wanted to jump in, I can export this type curve directly to Excel. If you have an Excel-based economics tool, you just jump right in there and go to Excel, open it up. There we go. All my streams for my type curve right there. Now jumping back into the app, the last part of my evaluation would be to go through visit all of the AOIs that we saw in the investor presentation, run through all of the economics, make sure that my investment case is sound. And at that point, I can have a little more assurance and where I'm investing my money, or what acreage space I'm investing my money in. Okay, let's recap. So in this evaluation, we covered one of the AOIs from Viper Energy Partners. We used Prism to screen that acreage base to understand if that area was still active. Point 2, we wanted to understand that that area was still economic. Passed our screen, so we carried that forward into the Q platform. We wanted to determine if new drills, type curves, if those are still economic. We also performed some analytics to understand how performance is changing in several of these AOIs. And after running through this, you can see that, by combining these two platforms together, you could evaluate new drill decisions, you could perform research, create analytics using our tools. You could evaluate acquisition opportunities along with performing other broader investment decisions. So I'd like to thank you all for tuning in. If you're interested in learning more, give us a call. I'd love to drop by and see how we could help. Thank you so much.